welcome. You're watching Business Today Television. I'm Sakshi Batra and this is BTS, that's Behind the Scenes, a show that gives you a sneak peek into the latest edition of the Business Today magazine. With me on the show are all my colleagues joining in who managed to put together a brilliant edition. Before I show the edition to you, let me welcome on board, we have Surabhi, our economy editor, joining in. We have Rahul Oberoi, Chief of Bureau for Markets. We also have Teena Jain Kaushal joining in, editor for Money Today. Warm welcome to all of you. And now to showcase the edition for all our viewers. This edition is already out on stands. I have got my copy and this one is something that you don't want to miss because this is the hottest topic that you are listening to, watching, reading every day. That's dealing with the trading blows and the tariff talk that we are looking forward to navigating with on an everyday basis with newer statements coming in. The latest one is the 90-day pause that President Donald Trump of the United States has really announced. What does that mean for India? Let's start off our discussion with Surabhi, who's done the cover story for this edition. Surabhi, tell us, this has been a very welcome relief. We've seen the stock markets really cheer this 90-day pause across the global markets, even in the Indian markets as well. But what does this 90-day pause really mean for India?
So thank you, Sakshi, for having me on the show. And yes, we have a 90-day pause, although on a daily basis we wake up in the morning with a fresh announcement from the US.
Yes.
So when we look at the reciprocal tariffs, it's included a 10% baseline tariff beyond which there was country-specific tariffs. So we must remember that the 10% tariff has come on board and is effective, although the remaining balance tariff on the reciprocal basis that has not been implemented. So for India, this does give it a breather because it's been hoping that the BTA negotiations that have been going on will give it some kind of a edge, and the US will not go ahead with the reciprocal tariffs. However, the 10% tariff has already come in, and for Indian exporters and shipments, it's turning into a big headache because the consumers abroad, they want the exporters to either split the higher tariff with them or there's an expected slowdown. So for now, while there's some reprieve on the reciprocal tariffs, it's suddenly still a very wait and watch scenario for India. And there are also concerns about dumping from countries like China, which have a very high tariff already levied by the US, and there's been no reciprocal tariff relief for them. So the Commerce Ministry and a lot of export promotion organizations are at it right now, and there's a lot of expectation that the BTA negotiations will come through during the 90-day pause.
Absolutely. Surabhi, you really partly answered some of my questions as well. The next one I wanted to ask you, how is India really going to be making use of this 90-day period? I think it, do you think too much of negotiations will keep, taking place? Will each sector be putting forward their own, expectations and the way we should be dealing with the US on the planned tariffs? Because you rightly pointed out that a blanket 10% has already been implemented. Beyond that, the 26%, we have some breather on right now. And in case the tariffs are to be taken sector by sector, what exactly should our strategy be? What do you hear from the top power corridors?
So there's been a lot of backroom negotiations between the Commerce Ministry and the U.S. Department of Trade and the Trade Representative's office, and they remain hopeful that the deadline of October, say September to October 2025, will be met for the BTA negotiations, and they're hoping that it could perhaps be an early harvest kind of deal, like what has been done with Australia with an interim SEPA. However, going forward, while even if we get a reprieve on reciprocal tariffs and India manages to not to sign the BTA, there is a view that India still needs to get its own act into place because we need to really strengthen our domestic manufacturing and make sure that we remain a viable part of supply chains and are able to compete with countries which have a lower tariff and are still an attractive investment destination. While China may have been slapped with very high tariffs of 125, 130%, but India needs to use this as an opportunity and look at small bits and pieces like perhaps deregulation or easier compliances and things like that. And there's a lot of thought going on in the government as well, whether this should be seen as a chance for a 1991 kind of reform movement to take forward.
Absolutely, Surbi. We'll keep an eye out on how things really progress because this one is going to be truly developing, and we will see how things progress between US and India, and we will also see whether India is able to take advantage of extreme high tariffs on China and vis-a-vis us being better off than the other Asian peers at this point in time. I think that's the biggest space that everybody is watching out for as to how India really takes advantage of this at this point in time and probably negotiate better deals for itself going forward. Let me now go across to Rahul because a clear implication of this 90-day pause has been felt and reflected on the Indian stock markets as well. Rahul, first up, I want to understand from you at this point in time, we have seen a relief rally take place. What are the kind of expectations that Indian investors should really keep from the equity markets at large? There has been so much of a volatility in the last 4 or 5 months odd that it is difficult to gauge what exactly should be the strategy on the equity markets. So what are you going to be advising there, and what are the top market masters saying?
Sure. Thank you, Sakshi, for having me on your show. So, investors can expect volatility in the domestic equity markets in the backdrop of the ongoing global uncertainties amid the earnings season which we are going through. So, and as per the market expert, one should tone down their expectations from the markets. The kind of returns which we saw since COVID may not be visible in the next 2-3 years or maybe 5 years. So, we can expect decent returns from the market from FY27 or FY28 onwards. So, in terms of sectors, as per market experts, the next sectoral leaders will be different from those that led the rally in the past 3 to 5 years. And there are expectations that considering the ongoing uncertainties, domestic focused companies or private sector banks or metals and cement may lead the market from here onwards.
Okay, so those are the key sectors that one can keep an eye out on. What, Rahul, market experts are saying about, precious metals, because that's been a space that now everybody is feeling a FOMO of, having lost out on the opportunity of investing in gold and silver. The way we have seen gold prices rally, there is a lot of FOMO that's emerging in market investors, and they now want to latch on to the bandwagon. Something that happened with the equity markets, we saw how defense, railways, PSUs went to that peak, and investors really went on heavy right at the peak, and from that time they have been feeling stuck. What are experts really saying on precious metals? And of course, the other aspect, debt funds as well. With the current change in the world order, how will debt funds perform?
So, as we know that gold and silver outperformed other markets in the previous calendar year with a return of more than 30%. So, experts are still bullish on gold and silver, but they believe that silver may deliver better return considering the demand-supply mismatch. And in terms of debt markets or long duration funds, they are bullish on this category, considering the another 50 basis point rate cut in the next 12 months.
Okay, got that. So that's as far as the expectations go. Teena, since we're talking about gold and silver, and you've really covered gold in depth for this issue as well, help us understand what have you garnered from the experts of gold at this point in time. Beyond that 32% rally that we've seen in FY25, there is continuing to be newer highs that we keep witnessing on gold week on week. What's behind this sharp surge? How much more potential upside could there be going forward from here? And I think the bigger question is, for something like I was mentioning with Rahul also, should one really invest after gold has soared beyond 91,000, 93,000 rupees per 10 grams in India?
Hi, Sakshi very rightly said that we need to look beyond this particular rally of 32%. And this rally has come on the back of global uncertainty, which has been caused by tariffs imposed by Trump. And because of this fears of global recession and the US-China trade war, gold is seeing to go to further higher points. So we have to see, is this rally sustainable or not? So we have spoken to many experts, and they are divided into, they have given us a mixed review. Some says that gold will continue to rise, and the reason is because of US China trade war and the global uncertainty we are living in. And if we look at the how central banks are behaving, last year they bought gold as high as 1000 ton. So even central banks are relying on gold instead of US dollar. So this is one good development that has taken place in recent years. So gold as a safe haven has gained lot of currency. It is seen as a store of value amid these times of uncertainty. So yes, I think that gold should go up from here further. And the recent report from Goldman Sachs, they have also further hiked the gold target. It is now 3,700, and this is the third hike in this year itself. So they also show the direction that where they think gold will go from here on. And the one of the data points, if I look at, which experts have shown, is we have seen that in the past 22 years, whenever gold has given us the return of more than 40%, then in the next year it goes down and give the average return of 4 to 5%. So given that we have already seen this high rally of gold, will the next year be the moderate return by gold? That we have to see, because data has shown us in the past. And again, there is another data which says that whenever the ratio of Sensex to gold is less than 1, then the equities outperform gold in the next 3 years. And right now, gold to Sensex to gold ratio is 0.86 something. So again, people are saying that data is saying that gold may go further. Gold may not give very high return the way it had given, and equities may outperform gold. So while data is saying something else, but the macro picture, because of global uncertainty that we are living in right now, gold is expected to go higher from here. And moreover, inflation is one of the key factors which govern the prices of gold. It is seen as a hedge against inflation, and when US inflation is rising, it is around 3% against the US comfort zone of 2%. So again, these are the reason gold is seen as a safe haven tool right now. And to your question whether one should invest in gold or not, I will always say that one should invest in gold. Gold is an excellent tool for diversification of your portfolio. At least 5 to 15% of your total portfolio should be in gold at any point of time, because when equities do not perform, gold will perform. When gold will not perform, equities will perform. So there is a balance. If you give 5 to 15% of your portfolio in gold, and it can be in physical gold, but I will not say jewelry because it has high making charges of around 30 to 50%. So I will say physical gold, maybe coins and bars, or digital gold in the form of ETFs and gold fund, that will give a very good cushion to your entire portfolio.
Okay, 5 to 15% of your exposure must be to gold at all times to get you that cushion on your overall portfolio. Gold ETFs or physical gold in terms of bars and coins could be explored at this point in time. We don't know when will gold stop glittering. It doesn't seem so anytime soon. And, at this point in time, it looks like investors must definitely look at this aspect. If you do not have a well-diversified portfolio, ensure that you have some aspect towards gold and silver, as both Rahul and Teena have pointed out. Well, we leave you at that. Thank you so much, Surabhi, Rahul and Teena, for sharing all your insights from the stories that have come in. And yet again, I'm going to be urging all our viewers, in case at this point in time you are wondering what exactly is happening with the world economies at large, what's happening with the markets, what should you be doing with your fresh investments, this is one edition that can truly help you find out your true strategies. And this one is something that you don't want to miss. It has important insights from the top experts, from economists to market experts to gold experts, all in one. And this is something that you should definitely invest in at this point in time. We'll leave you at that, but do stay tuned on to Business Today Television for a lot more that's coming up right up on your screens.